Grayscale is adding Solana to one of their funds. Now, what is so fascinating about this is it took years. From 2014, I believe, is when Grayscale got launched. It took years to get institutional investors interested in Bitcoin, to get them into these institutional quality funds, whether it was GBTC in a publicly traded trust or in some sort of private company, or a private fund. Now, Grayscale is quickly adding new types of assets. Solana, Uniswap, etc. They've added it to their digital large cap fund, which has about $494 million, about $500 million in it. There is a fund component breakdown that I believe we have. And when you start to look at this list of assets, these are not the assets that you would think that institutions would likely be buying. But to have $500 million in the fund is way more than I would have thought. So we see everything from Bitcoin, Cardano, Uniswap, Litecoin, Ethereum, Solana, Chainlink, Bitcoin Cash, etc. When you have a large entity like Grayscale, which manages $30-40 billion of assets, and they begin to add the long tail to it, their institutional clients, whether people like it or not, they are going to start to expand what they're investing in from Bitcoin to other types of assets. We know that they have a Bitcoin trust. They have an Ethereum trust. They also have other types of individual asset trusts. But what you see here is a digital large cap fund. Now, it's not surprising because something like a Solana wasn't in the top 10, then it goes into the top 10. If you look at a company like Bitwise, where I'm an investor, they essentially create passive indexes. So they have something called the Bitwise 10. Now, what is the Bitwise 10? It's the 10 largest cap assets on a market weight basis, and they rebalance it on a periodic basis. And so naturally, what you're going to get is you're going to have long only single asset investors. I buy Bitcoin, I hold it for a long period of time. Those are the investors that have dominated the market for a long time. Then we started to get active traders, people who would come in and they would buy and sell, some day trading, some a little bit less periodic, but still the ability to buy low, sell high, and do that over and over and over again. Now what we're seeing is a rise in more and more passive vehicles. So things like top 10 of the market cap or certain sectors, similar to what we see in the ETF or the passive index space. And so if it happens in the legacy market, it's going to happen in this market as well. We've got a quote here from Grayscale's head of legal. It says, "We will sell the existing fund components in proportion to their weightings and then put in Solana and Uniswap. The fund is really a great way for our investors who don't want to make a targeted bet on Bitcoin, Ethereum, or another digital asset. They just really want broad market exposure." And so what we are likely to see is some of the capital that's going to come into the market. They no longer want to play security selection, right? They simply just say, I want to have crypto exposure, whether we like it or we don't. We think it's positive or negative. Those investors are going to demand broad-based exposure in an index. And so naturally, if there is demand, companies are going to build these types of products. Do we think that this is a positive or a negative for the industry? And are we surprised that more and more people want broad-based index exposure?
No, I don't think so. I don't think we should be surprised. I think it limits your downside a little bit, right? Like on the risk curve, if you look at it, kind of having exposure to everything in aggregate, sure, maybe you should have conviction on kind of one or two assets that you really believe in. But if your general idea is that these assets are going to all appreciate in value and there's too many of them for you to really pick and choose from, and you don't know which ones are going to be the winners, and you just want a little exposure to the market and the upside of kind of the asymmetry that this kind of asset class offers, then sure, I think it's probably a smart decision to be able to invest in a vehicle like this.
John, what do you think?
It's a no-brainer. I don't see it being a negative to the industry at all. Same thing as almost like an ETF in my mind, where you get that exposure across just the entire asset class. I'm personally bullish, real big on Bitcoin. So having the other ones in there, I don't own any of this, but it's interesting to see, and I can see why people rush to it and why they are constantly adding and removing things based on the market size and the market cap of the different assets.
I think if anything, it's good for Solana and Uniswap, right?
Well, yeah.
Like outside of kind of just like industry looking trends and all that kind of stuff, like it's obviously good for these kind of these individual assets to be included in the broad-based index.
The other piece of it is when I think about the broad-based indexes is I actually have more confidence that investors allocating to those indexes are unlikely to sell because they're literally just looking over a long period of time. Let me invest into a lower cost index. Just give me kind of the industry, and they're not going to worry so much about what one individual asset goes up or down in price. Versus if I do security selection, right, or the idea of kind of a single asset selection. If I buy a Bitcoin or I buy Ethereum, then all of a sudden I start to get in the mindset of like, oh, I bought Bitcoin, but maybe wait, it went down 10%. This other one went up. Maybe I should switch. Or I bought another one. Oh, that one went down. This one went up. I should switch. And so the index type exposure gives me hope, and again, we'll see that they're longer term, stronger hands, which ultimately is a greater tailwind for the entire industry.
Yeah, and I think kind of to your point, right, is like if you just want there's certainly investors, whether they're kind of institutional investors or retail investors, that just want 1, 2, 3, 4, 5% exposure into the industry, right? They don't want to put all of their capital at work in digital assets. They own a bunch of other stocks, whether it's stocks, bonds, etc. And they just want that little bit of exposure to get off zero, right? And I think this is a vehicle that you could quickly see why they would invest into it. So they don't have to go out and pick a certain asset and say, hey, look, this is going to be the winner. I'm going to put all my percent in this or kind of all my capital in this. Instead, I'm going to go over here and get broad-based exposure to the industry and hope over the next 5, 10, 15 years that it appreciates in value. And it's a small part of their portfolio in general. So yeah, to your point, they're not going to go out and be actively day trading this stuff. They're not going to be selling it all the time. They're going to let it sit there and see if it appreciates over time.